Hi, I'm Terrell Turner, and this is the Stock Talk Show. And what we're going to be doing tonight is we're going to be doing a quick weekly recap. We're going to be talking about some of the top stories that are coming up this coming week and how they can actually impact your investment strategy. Now, a lot of this stuff you may, if you just read the article, you may not realize that it may actually have an impact on you. But we're going to dive in a little bit into that. And we're going to kick it off because there's a couple of stories that we want to touch on. And before I get going, let me go ahead and pull up the stories that we want to talk through so we can get that rolling. So the first thing I want to hop on, and I want to go to pull it up clearly. Yes, first thing I want to hop in are the stimulus bill that is in the works and the voting is happening, and a couple of things that I want to point out with that. Now, when it comes down to the stimulus bill that they're currently talking through is about $900 billion stimulus plan. And you know what? This is the fourth one that they are bringing through. So there's a couple of things that we really want to keep in mind when you're thinking about, okay, how can this actually impact my investment strategy? Well, a couple of things that the stimulus bill is trying to do to help stimulate the economy. It's trying to help bring confidence back to the market. Because when you think about it, any type of investment that you're doing, you invest money today for the hopes of a future or better return tomorrow or sometime in the future. And the thing about it is, if people are not optimistic about what the future looks like, then people don't spend money, and that means your investments or the value of your investments start to go down. But if people do have some confidence about what is to come, then you typically start to see the value of your investments go up. So one of the things that let me not say one, but a couple of things you want to pay attention to that are being discussed in this bill is an extension of unemployment and support for small businesses, because as small businesses are struggling, you may be thinking, well, I'm not invested in any small businesses. Well, that's where the entire economy is so connected to where even if you're invested in big businesses, a lot of times the customers of those big businesses are small businesses, or they're people who work in small businesses. So if the small businesses are struggling, the small business won't be able to do business with the big business. Or if the small business is struggling, and let's say if they have to unfortunately lay people off, then that means those individuals who would normally go out and buy those products from those big businesses, they won't have the funds to do it. So it is very essential that we support the small businesses. And in fact, almost half of the population in the US works for a small business. So that is a very big factor there. Also, there will be infusions in the transportation industry, more into supporting vaccine development and healthcare providers and education. And this is not the whole list. There are several other things that will be impacted with this proposed $900 billion bill. But the key of it is to get money into the economy or get money into the hands of people so that it can work in the economy to help, address some of the disparities or some of the concerns, some of the issues that people have about being able to get income to, provide for their needs, as well as being able to get money working in the economy. So that bill is actually in the votes, and we should be getting an update of that, definitely sometime this week, and seeing that trickle down. Now, another thing I wanted to call attention to, because as we've gone into the winter season, we have definitely started to hear of a surge and a rise in the infection rates. Now, with the rise in the infection rates, that could be concerning for your stock performance. Again, you know what? Stocks are about spending or investing the money today for a better return tomorrow. Well, if the infection rates are going up and people don't feel like we can get a handle on it, what you may see is that stocks may start to dip down a bit more because people are not as confident about what the future entails and what the future holds. And if that's the case, People may be concerned and they may spend less. Or one other thing that I really want people to think about is, in general, that's true. If people aren't confident, they may spend less. But also another thing that you want to keep in mind when it comes down to your investment strategy is that it may not be that people just spend less altogether. It may be that people start to become more strategic about where they're spending their money. And that is where I wanted to talk about the hotel industry, because, some of the things there that, a lot of people aren't traveling as much. But one of the, I guess you would say, ancillary or supportive things that's happening in the hotel industry is hotel industries or hospitality are having to invest in going touchless in a lot of areas within their business. I mean, for example, they're looking at things like, how can we let people check in on their phone? Or, hey, instead of handing people a key to be able to open their door, how can we register so their phone becomes the key that gets them in the door? How can we develop, connectivity between the television and their cell phones? That way, the guests will not have to continually touch the door. They won't have to touch the keys. They're trying to find ways to innovate there. Now, what that does is it creates an opportunity for the companies that make that type of technology. So companies that are developing apps, companies that are developing the wireless connectivity between all of the things within the hospitality industry, those type of companies might actually see a rise in their stock price, because across the board, yes, in general, the surge of the infection rates will definitely slow things down as a whole. But if you look more closely, there will be some pockets of sub-industries or some types of companies that will see a surge. I mean, when we look at the transportation industry, how do we actually help the transportation industry become more touchless? For example, as people are getting on and off the trains to get around, major cities, or getting on and off buses, or even just buying a bus pass, like, how do you make that less of a touch interface, and how do you make it more wireless and to protect people? And the companies that are making that type of technology may be ones that you should consider to look at a little bit more. Now, a couple of things that you also want to consider is, as we start to look at, the way that the treasury market and the bonds there, the actual interest rates that are paying out there, as those start to decrease, one of the things that you may see is you might see more investors shifting their money to stocks that pay a dividend. Because if you think about it this way, if it's a stable stock, and let's take an Intel, for example. Let's say you buy Intel. It's a pretty stable company. Now, no company is infallible. So it's just think about it. It's a stable company. Likely, based on the products it has and based on the history it has, it's probably gonna, be able to pivot and navigate through uncertain times. Well, if Intel actually pays a dividend, and if that dividend rate is actually higher than what you can get with your savings account or what you can get with a treasury bill, there may be some people who decide to take that money out of the treasury stocks and take that money out of the savings account and invest it in a stable company like an Intel, because every quarter Intel is going to issue a dividend, which means it's like a small bonus that you get for holding the stock. So you may see more companies start to shift their attention to do a little bit more of a dividend play in their portfolio. Now, another big thing that is very interesting about this time is usually around December, we see what they typically call the Santa Claus or the Santa Rally. And what that has happened in the last probably 50 years is that as we get closer to the end of the year, you usually start to see stocks start to take a jump. The prices start to increase a little closer to the end of the year as people are getting their year-end shopping done. Those year-end sales are going in. There's a bit more optimism about, hey, what's going to happen next year? Well, this year, I think we probably have to make some considerations because what we're used to seeing with the, December or the year-end stock rally, based on what's going on and people's confidence going into the start of 2021, because people think all in all, 2021 is going to be better than 2020. But what they're not sure on is exactly when that better will happen. So if you've been looking at the stock market and you've been, betting on, hey, we're going to see this year-end Santa rally, probably your Santa rally might look a little more like this as opposed to what it's looked like in the past, because there are some very, very concerning things for a lot of investors about what's going on. Now, another one I want to point to, and it is Tesla. Tesla is back in the news again. Now, Tesla is back in the news for good things, because one of the recent things is Tesla moved to the S&P 500. Now, what the S&P 500 is, it is an index, or let me put it this way. It is 500 of your somewhat largest companies in the US, and they all sit in what they call this list of the S&P 500. And the theory is that, these 500 companies in general represent, overall what the direction of, the stock market, or the direction of how the market is flowing. So it's a mix of all different types of companies that make up this S&P 500 list. And the idea is, if this index, the S&P 500, is up or down, then as a whole, you can probably say, hey, the market is up or down, because there's so many, it's a well-diversified, list of 500 companies. Well, one of the interesting things about Tesla moving to the S&P 500 is that Tesla is a type of company that is somewhat different from many of the others that are on the S&P 500, because the S&P 500 usually has pretty stable, stocks that don't see a ton of fluctuation. Well, Tesla is one of those companies that is still moving into cutting edge technology. And when you're moving into cutting edge technology, there could be a lot more volatility in your stock price, because if you announce a huge thing about SpaceX and what you can do with SpaceX, people will have more confidence the price may go up. Or let's say, if Tesla can't execute on, some of its electric vehicle strategy, then you may see the price start to decrease some. So that means the S&P 500 may be in for some, interesting fluctuations there by introducing Tesla, a company that has very high potential to do more or to grow because of the type of things that they're doing. Or they could see some challenges if they aren't able to deliver and execute on some of those things. Now, another thing that you're probably going to see is that, there may be a lot of volume movement, because as people are invested in these different companies in the S&P 500, since a lot of attention is on Tesla, it may make people a little bit more interested to say, hey, well, since Tesla's on the S&P 500, maybe I'll move some of my money off of the other companies in the S&P 500 and move it and shift it a little bit more to Tesla. And that means there could be a definite volume movement of stocks or investors moving from one investment to another. And then the other thing is that, Tesla is on the march to hit a $1 trillion valuation. And what that means is if you take all of Tesla's stock and you multiply it by the stock price, that's going to be your market capitalization. And Tesla is really on the march to aim to hit 1 million. Now, that is a goal, or let me say, that is a prediction that a lot of analysts have. And because Tesla is still in that growth phase and still pushing for that, that could also introduce some new elements to the S&P 500. And then the last thing I want to give you a heads up on is, every week we actually pick a company and we dive deep into that company where we talk about their product strategy, we talk about their financials, and we talk about where the price is at the time that we're filming it. And this week, one of the ones that we are going to jump into is in the gaming industry. Now, we do a ton of different ones, but this one is one that I want to highlight for you because I think it's something you should pay attention to. Yes, this week we are talking the gaming industry, and we're going to look at Zynga. We're going to dig into, their product strategy. We're going to dig into their financials, and we're going to look at, where their stock price is, where the trends are, and I'll give you our opinion based on the research we've done, whether I give it an A, a B, a C, or a D. Now, one of the things I will say in doing the research on this one, it was very interesting to think about it, because when you think about the company like Zynga makes, they make games that you play on social media, like all those free games that you play. But, most people would think, okay, these are free games that you can play on social media, not a big deal. But Zynga is actually a $10 billion market capitalization, which means it's a pretty big company, because there's a lot of eyes on it. And in that video this week, it comes out on Wednesday, we'll dive into the product strategy, we'll dive into the numbers, and I'll explain why a company that makes free apps can reach $10 billion in market cap. And we'll also talk about the stock and where the stock is going, where the trends are, because at the time when we recorded it, the stock price was below $10 a share, which could be a good one for you to add to your portfolio. But before you do that, you definitely want to do your homework, and we're going to do homework on that one, and it's going to be released this Wednesday on Facebook, Instagram, and YouTube. Now, one of the things that I also like to tell people is, we're not only just doing, homework on one company. We're not just doing these updates. We are actually analyzing several companies every single week, and we're creating videos where we walk through the details of what's going on in those companies. Now, we also offer one of those for free on Facebook, Instagram, and YouTube. But the other ones that we are analyzing every single week actually stay in the exclusive community for our smart and our VIP investors. Now, if you would like to actually check out some of the content that we have there, you can go over to patreon.com/Business Talk Library to join the smart and the VIP investor community, because there, what you'll be able to do is you'll be able to get access to some of the exclusive things that we are doing there and how we dive into companies. We help you understand what's going on with these companies, and we also give you a rating to say, hey, you know what? I give this company an A, B, C, or a D, because our team is doing in-depth research, going through the 10Ks, reading some of the latest news about these companies, and we're doing that just for our exclusive community of smart and VIP investors. So if you'd like to get access to that content, definitely hop over to Patreon/Business Talk Library, and you'll be able to see all the exclusive content that we create for that community. Well, this week is going to be an interesting week. It's Christmas week. But stay tuned, because there are going to be some great things that we're going to be releasing and sharing with you so that you can help understand what's going on and how it might impact your investment strategy.